Hey traders, Jason here from Leavitt Brothers. Happy Thursday. In this video, I'm going to somewhat argue and perhaps even try and convince you should try to trade more expensive stocks. I understand the draw with cheap stocks. I get it. The potential percentage moves are big. You can buy a stock at 10, sell at 12, or buy a $15 stock and ride it up to 18. The tendency is to fantasize about those big gains, but with greater upside potential comes bigger downside potential. And with this, you do get to nail some pretty good moves every once in a while, but you also get chopped up a lot. Let me go through a handful of trades that were profiled at Leavitt Brothers. At first, you might laugh at them because the percentage moves weren't that great, but they add up and you'll see what my point is here. Okay, so here's Home Depot. As you can see, rejected by its 50 here, supported by its 50 here, supported by its 50 here. Okay, we had resistance here at 192. Okay, some of you may reject it. Some of you say, hey, it's not worth playing. It's almost 200 bucks. How much? You know, what's the upside? What could possibly, happen here? It's not worth my time. Okay, but this happened. Okay, the stock broke out, went up to 204, came back down, and now it's consolidating again. Okay, if I zoom in with the 60-minute chart, you're wondering, well, how do you even play it? Okay, here was the resistance level at 192. Okay, and you could see how it moved up, consolidated, got scooped up by its 21 EMA, and then ran up further. Okay, again, you might laugh at this and say, it's not worth playing, but if the stock goes from like 194 up to 204 or 192 up to, you're talking about like a 6% move. Is your account up 6% in the last 2 weeks? I'm guessing your entire account isn't up that much. Okay, so don't laugh that Home Depot, don't laugh and say Home Depot is not worth playing because the stock went 6% and you're probably not up 6% in the last 2 weeks. Okay, perfectly good stock, very little risk, not much volatility, no danger, no scary moments where the stock might fall and hit your stop. Just a slow, methodical trade. Definitely worth your time. Here's Advanced Auto Parts. Wasn't interested. This looks like a big consolidation pattern, just very neutral. There's no momentum. You have some volume here, which kind of gets your attention, but overall, there's no momentum. You could say there's a resistance level here. If I back the chart up, you'd realize this was a consolidation pattern within an uptrend. But I wasn't really interested in playing in here simply because there was no momentum at all. Okay, but then the stock breaks out. Okay, so if I redraw trend lines here, stock breaks out, forms a consolidation pattern here, and again, you might say, hey, it's an expensive stock. It's in the 170s. It's not worth playing. But then it does this, and I'll redraw trend lines so you can see where we go here. So the initial breakout was at like 170. Which is going to be here. It moves up, consolidates, and moves up again. So it goes from 170 to 180, even if you got in here at like 172, 173, which is what I would do, because what we got here is what I call a moving average KISS trade. That's where you have a longer term moving average, and then a shorter term moving average comes down, kisses it, and then bounces off. So even if you didn't play the first move, which I wasn't interested in playing the first move because it was very neutral, wait till it breaks out, forms this continuation play within the uptrend. You get a move from like 170, 173 to 180. Again, it's not a big move. Maybe it's 4%, but I'm guessing your account is not up 4% in the last 2 weeks. Okay, so it's worth considering. Here is Broadcom. Okay, doing well, got supported by its 50 here, got supported by its 50 here, jumps, probably earnings related, I don't even know. Okay, got a resistance level here. Again, $300 stock, not worth playing is what most people would say, but then it breaks out at 300. Here's that resistance level again. Breaks out at 300, goes up to 306, 307, comes back down, tests 300, and now it's up near 310. Okay, again, a lot of you would laugh at this and say it's not worth playing, but you know what? A lot of little wins like this add up, and when there's very little volatility, your stops are not in danger of getting hit. You'd be surprised that after a couple months how these little wins add up, and the stress level is much lower. Kansas City Southern, a railroad. Okay, stock got rejected by its 50 here, gets above the 50 there, gaps up, again, probably earnings related, comes back down, tests the moving average, comes up, and forms like a continuation pattern here. Okay, more than $100. A lot of you are not interested in this. It's too expensive. You're more interested in that $15 stock that can go to 18. You're not interested in a stock that can go from 112 up to 117 or 118. Okay, I get it, but it does. It goes from 112 up to 118, and now it's consolidating again. Okay. Is it a big move? No, it's like 5%, a little bit more than 5%. It's not a big deal. Not anything to write home about. But if you have a series of 5%, 4%, 5%, 6% with lower stress than those cheaper stocks offer, you'd be surprised how much they add up. Last one, United Technologies, rallied nicely off a low, consolidating here. Again, you might say, hey, what's the big deal? Like, it's got its pattern here is like 122 to 128. What's going to happen? The stock's going to break out and go to 134. It's not worth my time. So it happened. The stock broke out, went up to 134. Now we have another pattern forming here. Okay, the market stays healthy. This will be back on our list. Breakout, probably run up to like 140. Again, most of you say not worth my time, but I got news for you. Lower risk, lower stress level, and the little wins do add up. Okay, so don't laugh at expensive stocks that might only give you 5%. All those little wins add up, and most of the time there's less volatility in your account. I understand the draw to cheap stocks, but oftentimes you trade them and your account's all over the place. You make money, you lose money. 2 months later, maybe you're up a little bit, and then Home Depot is up like 8%, and you realize, hey, I could have just put all my money in Home Depot instead of being, aggressively trading cheaper, higher beta names, and I would have been better off. Okay, it's something to consider. It's something to keep in mind. Okay, thanks for listening. If you like the video and want me to do more, give it a like and share it with your trading friends. You can also subscribe to the channel right here at YouTube and be alerted to new content that's posted. Come check us out at Leavitt Brothers. We provide market analysis and trading ideas to individual and institutional traders and investors. Again, thanks for listening, and I'll see you next time.